The S&P 500 ended with another positive month that makes it up 5 consecutive months. Year to date, the S&P 500, the best performing index, it gained more than 10%, 10.16% gain. You see, for the month of March, the New York Stock Exchange Composite Index is actually the best performer with a gain of 4.01%, followed by the Russell 2000 with a gain of 3.39%. Then the S&P 500 with a gain of 3.1%, followed by the Dow Jones Transportation at 2.34%, Dow Jones Industrial 2.08%, the NASDAQ Composite 1.79%. And at the bottom of the list is the NASDAQ 100 with a gain of 1.17%. Now, looking at the year-to-date, as I said earlier, the S&P 500 year-to-date gain is 10.16%, followed by the composite, the NASDAQ Composite with a 9.11%, and the New York Stock Exchange Composite gained 8.66%, while the NASDAQ 100 gained 8.49%, the Dow Jones Industrial 5.62%, the Russell 2000 4.81%, and the Dow Jones Transportation 1.97%. So as you can see, the NASDAQ 100 is slipping, and the S&P 500 is still holding at the top. So that shows you that there are some rotations going on within the market away from the tech into some of the value and also the defensive type of stock, the cyclical. Now let's take a look at the market internal and also some of the market sentiment indicator to see what we could expect in the coming week and the coming month of April. We see the VIX and the put call ratio is still showing that the market participants are bullish and also risk on. The VIX is sitting below the 20 level and it is sitting at 13.01 as of Friday's close. And the put call ratio is below the hedge zone or the hedge level of 0.75 is sitting at 0.7. And also during the last two trading sessions, we see that there are buying pressure indicated by the up-down volume ratio. It is positive, and also the daily advanced decline is also showing more advancing stock than declining stock. In addition to that, the new high, new low, showing the number of stock making new high is expanding, and on Thursday, there were 366 stock make new 52-week high versus only 13 stock make new 52-week low, and that's a ratio of 28-1 in favor of the new highs. Looking at the New York Stock Exchange cumulative AD line, it showed that it confirmed the S&P 500 new closing high, no divergence. Now, the NASDAQ lost ground last week. It closed down, but the up-down volume ratio actually showing a positive on Thursday and Wednesday. So it indicated there were buying pressure on those 2 days. And also the daily advanced decline show internal strength as well. And the NASDAQ new high, new low also showed the number of stock making new high expanded and outnumbered the number of new low by a ratio of 5-1. And looking at the cumulative AD line, the NASDAQ market, the longer trend of the cumulative AD line is still showing negative divergence, but the short term is showing slight positive divergence. So as you can see, the sentiment and the market internal are showing bullishness from the market participant and strength from the market internals. Looking at the yield curve, the 10 versus the 2-year, we're still looking at a inverted yield curve sitting at minus 0.42. And for the 10 versus the 3-month, we're also looking at an inverted yield curve sitting at minus 1.16. And looking at the US dollar, we're still looking for the US dollar to make its way back up to this 105.88 level. So it came up a little bit last week. And on the US dollar future, we are still seeing that it's sitting right near this composite point of control here, sitting at 104.27. So we're still looking for this thing to come up to this 105.84. Looking at crude oil, we actually saw crude oil had a strong week last week. It was up a little bit over 2.8%. It was actually 2.83%. So it's quite strong for crude oil. I'm still looking for crude oil to come up to this 86 area here. You see how it got a nice bounce off of this 80 area. Silver also had a decent week. It was up 1.05% for the week. So right now it seems to be holding at this 25 level. Remember, I was looking at this 25 area. As long as it could hold, we're basically looking for silver to come up to somewhere around this 26, 27 area. So I'm still looking for silver to get a bounce back up to that level. Gold had another strong week. It was up for over 4%, 4.01% to be exact. And remember last week, we were looking for gold to hold this level here somewhere around 2150. And if it could hold above this level, then we look for gold to come back up and possibly take out this high and put in a new all-time high. And we got that on Thursday, made a new all-time high and closed with a new closing high. So I wouldn't be surprised to see a little bit of a profit taking next week. And if that's the case, we probably see gold pull back to this 2224.60, basically 2225 area, and see would it get another bounce and continue to move higher. Now, if it doesn't, and let's say it breaks below this 2225, then we'd be looking at somewhere around this 2200 area for another test of support, and then pushes back up to put in another all-time high. So basically, we're still looking for gold to continue to move higher. Now let's take a look at the index ETF, starting with the diamond, the ETF for the Dow Jones Industrial. Remember last week we were talking about holding this level here because basically we're looking at this balance area. So as long as it could hold above this level to avoid coming back in to do a look above and fail type of a move, then we basically are looking for this thing to come up and possibly test the all-time high. As you can see, the price came up to the upper range, but it failed to make a new all-time high. Although it did close, I believe, as a new closing high here on Thursday. But in either case, it did not come up and take out this all-time high. Now, for the coming week, we'll be looking for upper range of 403 and 402. And that's pretty much in confluence with this 1x extension of this balance area up here, 403.54. So the market is pricing in this 1x extension pretty much. And also on the lower range is between 393.60 and 392.30. And it is pricing in right at the top edge of this balance area and pretty much back to this this pivot low here that it bounced off of. So for the coming week, we are looking for the Dow Jones Industrial ETF, the diamond, to either come up, put in a new all-time high and pushes up to this 1x extension at 403 area, or come back down and basically do another test of this upper edge of this balance area and see would it hold this level once again and then push back up and see would it take out the all-time high. Now, again, we have to keep an eye on it to make sure that if it does come in to this 492 area, that basically come back into this balance area, then we have to be, keep an eye out for the possibility of retracing down to this 382 area. Basically, it's like a look above and fail type of strategy down here. And for the SPY, we were also looking at this edge here, this 517.38, this balance area upper edge. And we're saying if it holds above this edge, then we look for the SPY to come up and possibly take out the all-time high. And as you can see on Thursday, it actually put in a new intraday all-time high, but it did not close with a new closing high. It did on Wednesday. So for the coming week, we are looking at a new upper range here. And the upper range that we are looking at for the coming week will be between 530.30 and 528.70. And this is pretty much in confluence with this 1x extension of this balance area at 529.65. Now, also the other thing is if the price coming back down, once again, it's going to be testing this edge of this balance area, and that's where the market is pricing in the lower range for the week, and that is between 517.40 and 516. So for the coming week, we'll see would be able to continue to push through and come up to this 1x extension. So put in a series of new higher high or basically new all-time high? Or will it come back down and try to test this edge again at this 517 area, then get another push up? Now, if it come back in below this 517, and just like the Dow Jones Industrial, the diamond, we're basically looking for a retest of this, retracement of this balance area. So keep an eye on this 517 and watch that all-time high get taken out. Looking at the Q, last week we were basically looking for it to see would it come back out of this balance area and get back above this and come up and take out the all-time high, and then possibly work itself up to the upper range. And as you can see that it wasn't able to get out of this balance area, it is still trapped inside of here in this balance area. So now we're going to be watching would the pullback continue, and if it does, then basically we are looking at a little bit of a look above and fail type of a move, and it could possibly come back down to this 430 area. So for next week, we see the market is pricing in the upper range of 452.50 and 450.70. And the lower range is between 437.30 and 435.50. So we're going to be once again see what the Q be able to come up and take out the all-time high and pushes up to this upper range area. Because if it is unable to get back above this balance area, then we be watching this lower range of the expected move down here at 437 and 435 here. There's high volume zone here. So we're going to look for a pullback to come down here if it is unable to break above this and move up to a new all-time high and get above the 449.34. And looking at the IWM, last week we were looking at this balance area here because we are looking at the possibility of coming back in and do a look above and fail and start retracing back down to this lower edge here. But as you can see, after spending a couple of days inside of this, just right beneath the edge here, it broke out of it on Wednesday and shoot to the upper range on Thursday. Now, although Thursday seems to be a strong day, but actually you're looking at this gravestone doji, so we have to be a little bit concerning about that for possible pullback in the near term. And if we look at what the market is pricing in for the coming week, it is pricing in a upper range between 215.80 and 214.30, and also the lower range at 406.30 and 405.80. So what we're going to see is maybe we get a little bit of a pullback on the IWM and then come up and pushes through into this upper range here. Now, the next major target will be the 1x extension of this balance area, and that pushes up to the 222 area. I doubt it we could get there next week, but this upper range, could be a possible in play if it could take out this high here next week. So those are the index ETF. Now let's go and take a look at the sector in the SP500 and the semiconductor as well as the biotech and a few other sectors. All right, let's take a look at the 11th sector in the S&P 500, starting with the XLK, the technology sector. See, the technology sector is a little bit underperformed relative to the S&P 500 last week. And right now, it is basically testing this trend line here. So we'll be watching this trend line once again to see would it be able to hold above this trend line and possibly make another push up to take out this high. If it is unable to hold this trend line, I'd be looking for this high volume node here at 205.57 to see would it be able to hold this and get it bounced back up. And if it doesn't and it break below it, then we're basically looking for a possible retracement down to this low volume node here near the 196.51. And for the healthcare sector, we saw that it held this pretty much this trend line here, got a nice bounce on Wednesday, basically got a gap up on there and, came up to this high here. So for the coming week, we're going to see would it be able to break this high, and we're going to do a 1x extension of this area here. Basically, we can look at this as a balance area, and we're going to do a 1x major move on that just to get some idea of what that is, and just get a little bit of a approximation at this level here. So if we scroll down, and that would be 151.99, so it's about 152. So for the coming week, we're going to see would it be able to get up above this level here, 148.77, and see it pull back at a back test bounce and watch it work toward this 152 level. Now, if it is unable to push through and then come back in, then we're basically looking for a look above and fail type of a strategy move here, and look for this retracement down to this 144.37. Now, of course, these high volume no over here could provide some temporary support here, and we might see a bounce back up when it get down to this 146. So just bear in mind of this look above and fail type of possible move here if it is unable to hold above this 148.77 or 148.27. And for the consumer discretionary, basically looking to see would it come back up and fill this gap. And we saw that the gap did get filled last week. And right now, we're going to look forward to see would it be able to push up to this high here and get above this 185.29. So otherwise, we be still keeping an eye on this trend line to see would it be able to hold this trend line. Now, there is this high volume no here at this level here, this 180 level. So if it break the trend line, watch for this high volume no to see would it be able. So if it break this trend line, watch this high volume no at 180 to see would it be able to provide some support and get a bounce back up. Otherwise, if it break below this high volume no, then we could look for a possible retracement down to this low volume area near the 177.50. Financial continue to show strength, and this move up to a pretty much took out this high here. So we're gonna continue to watch to see for it continue to move higher. If it pulls back, then look for this trend line to see how it react to this trend line here. We expect it to hold this trend line and get a bounce on any kind of a pullback. And for the communication sector, we see in the communication sector, it held this trend line here. Basically got a bounce off of this low volume no here. So we're looking for this to come up and possibly take out this high. And the industrial sector put in a high here. It took out this previous high. So basically put in a new all-time high here. So continue to look for this thing to move higher. And if it does pull back, then look for this trend line and continue to looking for this low volume no here. This 124 for potential rejection, basically get a bounce back up. Look at the stable, the consumer stable. We see that it booked to this high here last week. We're going to continue to watch the stable to see would it be able to come up to this 77.34. Now, if it pulls back, then still looking at this trend line as potential support here. There is a high volume no here, somewhere between 76 and 75. It looks like somewhere around 75.5. So we could see it pull back, then get a little bit of a bounce and push up to possibly work itself up to the 77.34 area. Now, if it break that high volume no, then we could see it come down to this trend line and possibly get into this low volume zone here between this area of 75.25 and 75. And the energy was quite strong last week as well, and it moved up above this 73.69 area here. So right now we're basically looking for the energy to see would it be able to come up to this 95.96, essentially the 96 level. So if it pulls back, then we'd be watching a potential retest of the 92.56 and possibly this high volume no here down here at the 92 level. And for the real estate sector, we see that it is still inside of this balance area. Basically, we're looking at this balance area here. So we'll see, would it be able to come back up to this top of this balance area or break this trend line, work itself back down toward the lower edge of this balance area at 3763. And the material sector continue to show strength and continue to move higher. So wouldn't be surprised to continue to see this thing move higher here. Now, if it pulls back, then we're basically looking at this 90.80, this high volume node to provide some sort of support here. And if it breaks this, then we're basically looking at this gap here and this low volume zone. So looking at this gap somewhere around near the 89.35, 89.50 area. And utility was quite strong last week, and it broke this trend line, moving up toward this 66 and a quarter level here. So we'll see, would it be able to get up to this level? Otherwise, we'd be looking for it to pull back to this 64.94 and possibly come back in and maybe do another check of this high volume zone here before it pushes back up again and come up to this 66 and a quarter. So those are the 11 sectors in the S&P 500. Now let's go and take a look at the other sectors. And look at the semiconductor sector. Remember this right here, we're saying that it was basically gapped up due to Micron's earning report. And right now, it doesn't appear that we're enough strength to push this up and take out this high. Right now, it's kind of pulling back. And we're basically watching this trend line here or this balance area here and see would it be able to hold this balance area and basically just chop around, then make another push to put in a higher high. Otherwise, if it unable to hold this balance area and break, then we'd be looking for this thing to come back down and come to this low volume zone here and check this 212.18 and possibly get down to this 206. So the key thing to watch is basically this balance area here between 230 and possibly somewhere around 218. The home builder also continues to show strength and wouldn't be surprised to see it continue to move higher. But if it does pull back, then look for this 109.27 and possibly come down to this low volume area here at this 107.50. So essentially fill in this gap here. Also, the retailer was quite strong last week as well. It's basically trending above this trend line here. So I wouldn't be surprised to continue to see it move higher. But if it does come down, then, we're basically looking at this balance area here, broke out of this balance area. If it come down, then look for a check at this area here, just beneath the 78 level and the trend line here. See, would it be able to provide some support and push us back up? So the key thing is look for this balance area. If it come back in, then yeah, there's always that possibility of look above and fail. Then we'd be looking for this thing to possibly move back down to the 75 area. And for the biotech, last week, the biotech got a little bit of a bounce right off of this high volume node here. And right now it seems to be trying to come up and make an attempt to break this trend line. So if it could come back up and break this trend line, then we could look for a move to come up to this high. But if it is unable to break this trend line, then once again, we'd be looking at this high volume zone here. So that would be 136. So the upside is 140.116, and the downside here is 136 for potential support. And if it break this high volume zone and this trend line here, then we'd be watching this 133.50. And for the long-term bond, we are looking at the long-term bond still kind of chopping around inside of this balance area here. Although it did get a little bit of a bounce off of this high volume area. So we'll see, would it be able to move back up to this essentially 97 level, or would it come back down to this 92.29? Now, if you're interested in the FAANG stock analysis, go check out my video that I posted earlier on the FAANG stock. I will have the link in the description below. And be sure to smash the thumbs up to give it a like to help promote this video. And if you are new to this channel, click on the subscribe and also make sure that notification is turned on so you won't miss any future video from me. Thank you for watching and good luck on your trading.